traders, happy new year. Here we are, the first currency room of the year, and 2022 is over and we are ready to grab some pips in 2023. Let's start off with what happened this first week of the year. We had really a range-bound price action in equities. We're trading between 3,800 and 3,880. We've been there for the last 2.5 weeks. So volatility in the equity markets is lower. However, volatility in the Forex market is fantastic. So last week we saw the yields pull back. We saw the US dollar was flat for the week, but actually sold off quite a bit at the end of the week. We saw oil take a big dip down, but we saw all the metals take a big run up. I actually think that basic materials are going to be a really good performer in 2023. And I think oil and nat gas is probably going to be flat to down a little bit. But I really do like those materials sector. These are some of the items we're going to be chatting about in our year in review that we do at the first of the year, every single year. I believe that is scheduled for the 17th of January. So come join us on that one. Cryptos, we had a little bit of a rally, but look, this is just a rally into a long-term downtrend, nothing to get too excited about. I really wanted to focus on the numbers we got last week. So a couple things we got on Wednesday was the PMIs. And you can see that the PMI was a 48.4. Anything lower than 50 is contraction. So manufacturing is contracting. Then we got job openings were higher than expected, and we got ADP higher than expected. The market didn't like these numbers because they want the Fed to back off. So the ISM number is saying, okay, the Fed can back off. And then we got the jobs numbers. We got the payroll numbers. On Friday, we got payroll report, 223,000 jobs created, 3.5% unemployment rate. It dropped. I fully expected the market would take this as bad news. However, the market rallied on Friday, and they took this one little bit of information. Wages were a little bit light, and they took the market higher. We also got the ISM PMI services number was really bad. That's the lowest number we've had since the pandemic. This is 2/3 of the economy. And that really gave the market a little bit of juice to say, okay, the Fed is very likely to back off. Ankit, what did you think about that number when it came out on Friday employment report?
Hey, Rob. Well, it was definitely a surprise. And I this is where I was telling you earlier, if I had to write a paper on this, everything should have, pointed out to a stronger dollar. I would have expected the dollar to kind of finish off at the highest and break out of that range. Again, that's the premise would have said. But at the end of the day, this is why we always say follow the price action, because whatever we think that should have happened is the opposite. So again, I find this a lot of times traders kind of battle with the markets. It's just because sometimes things just don't line up, and I think today was just a perfect environment where it just didn't care. So at the end of the day, price action is the king. And this is, again, telling us that market wants to go higher. So, again, if you just take a look at one positive information and the market rally off of it, that's what's telling you that market's ignoring the bad, or it's pricing in the bad and just kind of, looking up to rally a little bit. So I think that's what we are. We just traded range bound the entire week. We were still very undecided. And, again, Friday being a pretty big day, or trying to break out for the week. So I think next week it's really setting up a nice stage going into next week. But if you look at price action overall for this week, it was eventful. I mean, we had a couple of percentage move up on the upside and the downside. But it's just if you're trying to establish a trend, I think we have to wait till next week to see the follow through and the continuation. But again, very nice price action. Can't complain about it. And I think this is again setting up us nicely for next week.
What you said was very wise. I remember as a younger trader, I used to say dumb stuff like, the market's wrong. The market got this one wrong. I'm the dummy. And, I didn't understand that, no, I got it wrong. The market is always right. And so we got what I thought was going to be bad news for the market. I thought equities were going to go lower. They didn't. They ran. I'm wrong. The market's not wrong. I am wrong. So the market for the week, you can see that the U.S. market's up just under 1%. Now look, that mostly came on Friday. Friday, we had about 2.2% upside, so that erased about a 1.5% loss. The world indexes did much, much better. You see cryptos up 5%, Gold had a nice week, and oil got killed, as we talked about. So let's jump into the charts of the S&P. And I really want to focus on this area here. We've been talking about this area from 3,800 up to 3,880. We've been in this range for quite a while. We're starting to get some pressure from the moving averages. We'll have to see what happens next week, as Ankit said, if we do get a breakout to the upside. Here's the problem: is there is a lot of overhead resistance. There's a lot of overhead resistance. If we get a breakout, I think that's what's likely to happen, but I think it's not going to be a big run. I don't think it's going to be a huge run because there is a lot of overhead resistance. But at that point, if we break out above 3880 and hold, you have to be more bullish on the markets than bearish. If we don't break out next week, then we're back into this range and likely to probably break lower. I think if this market doesn't break out here in the next 2 days, on Monday, Tuesday, I think we're going to see lower prices after that.
Yeah, Rob, I just quickly want to add to that chart there and just kind of look at the price action we are seeing here. Again, I think we can still break out to the upside, but again, how quickly we can get to the upside, I think that's the kind of the question here. Markets are coiling here. Again, we could easily see markets reject the upside and kind of fall back into the range. So just realize that this is the market price condition where it's not super bullish and it's not super bearish. So this is the time not to really overstep either side. I think you just have to use the right expectation.
I completely agree with that. Let's jump into the performance. This is the performance of the cryptos. You see Litecoin was great. Cardano was great. Bitcoin flat a little bit. So everything had a decent week. We'll take a look at the charts. Everything is still basically in a sideways trend at this point. Over to the Forex. We got a lot of big moves on Friday. So Aussie and CAD really came and performed well. You can see the Kiwi did not. We saw the Kiwi rally all of the last quarter of last year. Kiwi just had a huge run. And Ankit, you called it right. You said, hey, I think this thing's getting a little tired. Let's shift over to start looking at like the Aussie and the CAD. And I think that's what we're going to continue to see. The Kiwi had a huge run, and now it's just tired. Other things are going to take its place most likely. The yen was really erratic. One day of the week, it was up nicely. The rest of the days of the week, it was down. I still like yen short. I still like dollar short. And again, as you can see here, CAD and Aussie tend to be the best performers here. Let's take a look at the markets and give it some scoring here. We are now trading above the 20-day moving average, or at least we are at the 20-day moving average. So we have had to adjust our market score from -2, which is where we've been for the last 2 weeks, up to a -1. So we're just becoming a little bit less bearish. If the markets break out above 3880 next week, we're going to have to go to a 0 or a +1. That's just what the market scoring says. Even if you still feel bearish, too bad. The market's right, you're wrong. We're going to follow the market and the market score. Let's take a look at the world indexes. You can see they're actually trading even better. We've already kind of broken out of this range, which is another reason why both Ankit and I think we are going to break higher. We've seen the rest of the world break out. The US market is just lagging a little bit. There, again, is a lot of overhead resistance. So while we do think the market is going to be bullish, we think it's going to be a rocky road for the next week or two if it does continue to move higher. We take a look at cryptos. This is what we're talking about. Yes, we had an up week, but this is not a great trading environment. This is just a very, very narrow range. And until we actually get moving averages that aren't just flip-flopping on each other, until we get moving averages that are strongly trending in one direction, either up or down, cryptos are not a good trade at the moment here. Unless you're looking at some really short-term stuff, which is really just not my style, not Ankit's style. So let's move on to the calendar next week. We do have one very big item here, and that is the CPI. CPI is coming out on Thursday. The estimates are for zero growth month over month. Now, as you can see, it's still 7% year over year. The markets don't really care about that year over year. They care about the month over month. If this thing comes out at 0 or less, the market is really going to like that. If it comes out at 0.1, I don't think the market minds that. 0.2, the market's going to mind that a little bit. 0.3 or above, the market is going to hate that. But I think this number can actually be a little bit higher than expectations of 0. If it comes out at plus 0.1, I think the market still is totally okay with that. I think there's more likelihood for this to be an upside number than a downside number. And again, putting more pressure on the dollar as it continues to fall. That's really about the only thing I'm looking for. CPI out of Australia on Tuesday. Those are really the big numbers here for this week. So our outlook for equities are bullish. We are actually bullish. Now look, when I say bullish, I'm talking about +1 bullish. Not really excited, but we do need to break out of the range. So this is going out over the weekend. We need to see Monday be an up day. If Monday is not an up day and we just fall back in the range, then that's where we are. We're still in the range. If Monday can hold, then all of a sudden we've broken out of the range and we have to get a little bit more bullish. The CPI is going to be very, very important next week, so we'll be watching that one. Let's take a look at all the currencies. Now I'm going to go into the cryptos here, and I'm just going to show you this page. We're not going to go into individual cryptos, but I just want you to see the price action that we're seeing. Here's Bitcoin, here's Bitcoin Cash, here's Ether. Litecoin is the only thing that's actually moving a bit. It's moving a bit, but you can see we got a lot of overhead resistance here. None of the velocity scores or the trend scores are really telling us to be bullish crypto. So because the market has to tell us what to do, it's telling us don't do anything in cryptos. We're just going to skip cryptos until they give us a better signal. Let's focus our time on Forex here. So here is the dollar. Now, as you can see here, we have a daily chart on the dollar up here. And this is a really, really solid low base. That was a terrible line. Okay. That's a really solid low base. And until we break out one way or the other, we don't know where it's going, but you can see we're closing down at the low of the base. If the dollar breaks this low next week, it is a great looking short. Absolutely great looking short. It's not ready yet. I'm not going to be clicking buttons on Sunday. I'm going to be having to wait for one nice solid candle to close below that support line, and then I'm all about short dollar. So for me, short dollar is a great, great looking trade next week, but we do need a little confirmation. The question is, what do we play it against? And here we have the yen is actually showing us it's at a +2. I've really been liking dollar yen. Most of my trades lately have been dollar yen because these two are really going in opposite directions. Ankit, what's your call here on the yen?
Hey, Rob, I have to agree with you. Again, I think if we take a look at the price action, this is the dollar yen has been trading in a very wide range. I mean, from bottom at 130 to the upside of 134, that's a 400 pip range. And that's where we have been for the last 2 to 3 weeks. So I think eventually, if we break out of that 130 support, there could be a much bigger move. But right now, if I have the choice, do I play the yen to the upside or to the downside? I actually like to play yen more to the upside. But in between, I mean, this is a kind of a trade that's not an easy trade because you can easily have a very good solid couple of days and a very big down day. I mean, exactly what we saw this week. But overall, if you look at the trend is moving to the upside.
Yeah, I totally agree with that. So we have a dollar that we want to be short, but we're waiting for a little bit more price action to break out of the range. We like yen. Let's just keep going to see, okay, is that going to be the best pair, dollar yen, or is there going to be a better pair out there? Let's jump into the Swiss franc, and we can quickly answer our question. It is definitely not moving like the yen is moving. You can see here, it's going nowhere. Totally sideways. We don't like to trade currencies that aren't going anywhere. We will check back in on Swiss franc when it starts to move. Coming over here to euro. As you can see here, euro has been slowly moving higher. We did have a nice trend here all the way from September up to November. We based all of November, and then we broke out a little bit in December, and then you can see we've fallen back down. We had the euro as one of the stronger currencies just a few weeks ago, but it hasn't really developed. So we're backing off to a 0. So when things are at a 0, it's a no trade. We're not looking to make any trades on euro. We're going to look for other currencies to pair up. The pound was also looking good. The pound, we had 2 moving averages. It wasn't like a rocket ship, but it was moving higher. We were making some new higher highs. We had broken out, and then it utterly failed. It utterly failed, and now look at this price action here. We're now low basing here. I do like pound now on the downside. That being said, I need to wait for a breakdown. So for right now, pound is at a -2 for the trend score, but as you can see, there's no velocity right now. It's just not going anywhere. We'll check back in on pound next week and see if it can break down below that low. Moving next to the CAD. Now the CAD had an absolutely dreadful November. This was a huge drop, and we just low based. And we've been waiting for the CAD to break out of the bottom of that low base, but it won't. As you can see here, it just won't. And this is why we wait for confirmation. We just saw the dollar is basically in a very similar pattern, and we may not get the breakout. Just like with the CAD, we didn't get the breakout. At this point, though, CAD is now starting to push up against the upper end of this range, and really 1 or 2 more green candles. And I think we have to start thinking about CAD as a bullish currency instead of a bearish currency like we've been leaning really for the last 2 months. Anka, what do you think about the CAD here? I think that employment report we got on Friday could actually break the CAD to the upside. What do you think?
Absolutely. I think CAD has been the one that's been on my watch list for the longest time. And, so far, this has been a very consolidation phase right here. So I know we have 2 camps here. Some traders are looking for a bigger breakdown to the downside. But if we take a look at seasonality patterns, I've noticed that, usually CAD bottoms out in January and then start to go rise up again. Today, again, jobs report was amazing out of Canada as well. So I think the reason why we saw a sell-off in the Canadian dollar because we had the very weak PMI numbers. So there was a good news and bad news, and despite of that, we still have a good strong candle today compared to the US dollar. So I think if we take a look at the last month and a half, if the dollar's done really bad, I think the CAD has been equally bad as well. I think CAD was worse than the dollar. I think that could change a little bit here. Maybe the CAD will be the second weakest or the third weakest compared to what it used to be. So I think slowly we need to see an improvement. I would love to be, looking for this on a long side if we can break above the 50-day moving average. Until then, I think this is still a consolidation phase. So as we discussed earlier, again, we're looking for confirmation. We're looking for a trend change. None of the movements today has really established a new trend or a new high. So I think until that happens, we want to be very patient. These are the trades that are not really developing yet. But again, these are the ones that we need to pay attention to because when they do move, then we are ready to jump on those trends. But I'm on hold on the CAD here. But I think in the next week or so, we could see some sort of breakout happening in this currency.
Totally agree. And again, the scores are a 0. They're at zeros and barely +1. So definitely not ready yet. This thing needs another at least week, in my opinion, before we can even look at it. Next up is the Aussie. And the Aussie has already done it. We just talked about needing confirmation, needing it to break out and actually make some runs. All of a sudden, now you can see that we had this little downtrend line. It's broken that. It's broken above the 20. It's broken above the 50. And Friday's candle was just a great candle here. This thing has turned. Now, look, it doesn't mean it's going to run all the way up to 81. We have no idea, but it at least has shown us that the short-term price action is no longer lower, and it actually is starting to get a little bit higher. And you can see we're starting to get some general bullish movements here on a 4-hour chart on our velocity score. So Aussie is another currency that I do like on the upside. So we liked yen to the upside and we like Aussie to the upside. And then we come over here to Kiwi. And this is what I was talking about. Kiwi was an awesome trade. And we hit Kiwi a lot of times going up to this high here. And when it backed off, we said, okay, it's got to put together a bounce and make a new high, and it didn't. So we are not bearish at all in the Kiwi. It's just we're not as bullish. It really is going to need to get back up above this little resistance point before I start to take a look at it again as a bullish currency. This is a big move, and it's likely going to have to digest this move for at least, a lot of times the move sideways lasts as long as the move higher, and that was 2.5 months. I'm on hold on Kiwi. I'm really looking for Aussie to take the driver's seat. So on our trend scores, this we're looking at Aussie and yen. Aussie yen, and if you're going to play crypto, Litecoin is the only thing with rising moving averages. On our velocity score, these are the things that are ready like right now. What's moving right now? And nothing is really moving right now because we talked about what we wanted to pair up. We wanted to pair up stuff like Aussie and yen long against like dollar short. Take a look at this. Nothing's really developing here. Again, we like Aussie, we like dollar short, but it's not there yet. Yen that we also like on the long side is down here at a -2. So we're going into the week not ready to do anything, but we're waiting and watching for better entry points on these pairs. Let's go in and take a look at some of those pairs right now. So we're going to be taking a look at Aussie long, yen long, and dollar short. So that's really just going to give us 2 currency pairs to look at. First up is dollar yen. So here we have, I'm going to start off with the daily chart. Anytime we get a bounce or a base, it's a great entry point. We're just waiting for, again, these little bounces to fade and little bases to fade out. We got this nice little bounce here off this bottom for 3 days, and you can see this nice reversal candle here on the daily. This thing looks really good for a short. I mean, this is exactly what you like. A very good downtrend and a little rally that we can sell into. So dollar to me looks absolutely great, and dollar yen specifically looks really good. The only question I have is the question of timing. I've got this big picture on a daily chart saying, okay, I like it on a daily chart, but I'm going to be trading off of some smaller time frames. So I've got to say, okay, where's my best entry? Where's my best entry here? Here's a 4-hour chart, and you can see we just broke down below the parabolic SAR. The EMA is now sloping lower. The RSI is now crossed under 50. Frankly, this is actually a good-looking entry right here, right now, at 132. If you're going to be carrying this over into next week, or you want to take a look at this trade early next week, I think the trade is ready to go right here, right now. Ankit, what do you think about this?
Yeah, I mean, I do like it. I think it's a matter of the holding period and the timeline. I mean, there's decent movements. Like I talked about that range that I was talking about. I think if you look at the range, there's very good movements. That's a 400 pip range that we have, and we can actually have nice movements back and forth within that range. So, I mean, you can see 130 is an absolute target right there. I kind of love that. But I'll be questioning it if you below the 130. Like I said, I'm not ready to play that breakout trade, but I love the trading the range right now within this low area. So good, decent movements, and I think you just have to kind of be on the right side and see where the momentum is. Early part of this week, the momentum was on the upside. Now the momentum is on the downside. So there's a lot of back and forth, which again, I know some traders are not so easily accustomed to this. When you see a lot of back and forth, but that's just really what's moving the markets is this back and forth momentum. And so we don't need to be married to an outlook. We just need to follow the momentum. And when the momentum is over, we're out of that trade. So right now, like I said, the dollar yen, I think that's in a downward momentum. So in a downward momentum, you want to see bear rallies. You want to see rallies to be sold off into. So I think that's the strategy here, going down to 130, and after that, we'll have to reevaluate that trade.
Awesome. Let's take a look at Aussie dollar as well. So again, we like the yen and we like the Aussie and we like the dollar short. I'm going to go out to a daily chart here just so we can see where it is. And you can see this is just a really, really great move. So we bottomed out in October and we had this big run. And you can see here, we have now been going sideways since the middle of November. So we've formed this high base and we are just about ready to break out of this thing. Breakout of 68.85, 68.90, somewhere around there. To me, that is a great buy signal. We have 1.5 months of sideways action, coiling and gathering energy for a breakout to the upside. So this one is also really, really close for me. It's just a matter of timing, and we'll have to wait and see what happens next week. But I think an entry here at 68.95 makes a whole lot of sense. And this is one, if you want to be looking at a longer term trade, the daily chart looks absolutely wonderful on this one for if someone says, hey, I want to hold something for 1 week, 2 weeks, 3 weeks, whatever it is. This one looks like it could have some energy to the upside. Is there any pairs you want to take a look at, Ankit?
Hey, Rob, as you're taking a look at Aussie, let's take a look at Aussie Kiwi. Paying attention to correlations are very important right now. And I just want to show, look at the negative correlation Aussie Kiwi was. So I absolutely did not like Aussie at all in the last few months. I mean, you can see Kiwi was a better choice. So this thing, you can see, we went from 113, 114 down to 104. That was a 1,000-pip move. That was a massive move. So clearly you can see right now, Aussie has fallen back into the favor. And very similar to what we were looking at with the Kiwi in the past few months, each time you wanted to buy, I would buy Kiwi over the Aussie. Each time you wanted to sell, I will sell Aussie over the Kiwi. So I think it's kind of flip upside down now. I actually like Aussie more to the upside than I like it to the downside. So we could see some sort of basing pattern coming in between, but you can see that this is now kind of moving a little bit more to the upside here. So pay close attention to the Aussie Kiwi, because that will guide you to make sure that you're on the right currency pair. And if you were following this for the past few months, you would have been in the Aussie, Kiwi over the Aussie. So very important to take a look at these pairings. So when they do deviate from each other, that's where the big move will happen. And you can see that the Aussie Kiwi has been in that negative correlation. Right now, unfortunately, I think our options are smaller or limited, because right now we only have the dollar and the yen that's moving. And then the other side, we have the Kiwi or the Aussie that's moving. So we just have to stick with these pairings until we start to see something else open up. And at that time, we will shift our focus as well.
And speaking of other currencies, let's check in on the pound, because I have the pound as ready to be bearish. Not quite yet, but I want to pair this up against the Aussie. So you can see here, we are some pretty key levels here on the daily chart on the pound Aussie. It's not ready to go yet. It's just not ready. But if the pound gets a little weaker and the Aussie gets a little stronger, once we break down below this 175.50 area, you can see that there's not a lot of support or resistance areas until we get down to like 171. So I like this trade. It's not ready yet, but a breakdown below 175.50 would also be a nice little entry here if you wanted to be short pound. Here's the thing. I think the dollar is a better short. So I'm not looking to be short pound against Aussie. I'm looking to be short dollar against the Aussie. But this is one that if the dollar isn't as weak as I thought it was going to be next week, and the pound is showing me that it's going to be weaker, I'll jump on this one and take a look at the trade. To wrap up our first currency room for the week, let's wrap this up. So we think the markets are going to break out higher. We think we're going to see higher movements, a little bit more of a risk-on environment than we've seen for the last month or so. Just make sure that you are checking price action and focus on the currencies in play. Right now, Euro and Swiss franc are not in play. They are dead. We are seeing CAD not quite ready, maybe ready next week. So as Ankit said, we have limited options of what we can actually trade in the Forex market. We had a great first week of the year, and I think this week is going to be another great one as well. We love to see the volatility come back to the Forex market. It's just great to see. It's having a fun time trading it. So everyone, let's go make some pips this week and take care. Goodbye, everyone.